Mallory from New Orleans Magazine, and I'm here with Eric Greschner and Rudy Blanchard with Regatta Research and Money Management, LLC, for our magazine's feature on New Orleans-based wealth management and financial planning firms. Tell me a little bit about what you all do.
We're a boutique fee-only wealth management firm, and we focus on the needs of wealthy individuals, corporations, and trust.
How did you decide to start your own company right here in New Orleans?
It all started when I graduated from LSU Law School, and then I worked as an institutional research analyst on Wall Street. And I miss New Orleans a lot, and I wanted to come back home. So I started Regatta in the back of my dad's garage in River Ridge back in 1998. My only clients at the time were my mom and my dad. I was an early proponent of financial education and started teaching at Tulane University College. And I met Rudy at the time, who was in the business of educating financial professionals across the country himself.
Well, Eric and I discovered that we had the same passion for educating people, and our initial thoughts on how the firm should be delivering this service to our clients were very similar, and we instantly clicked.
What do you do that's different from other firms like brokerage banks and insurance companies?
Well, we wanted to reimagine how financial planning works. Banks and brokerage firms often focus on selling their own high commission products that are filled with conflicts of interest and often include hidden high fees. Duties of loyalty and protecting clients' best interests are not required by law. We think that is wrong.
Instead, we thought, how would we like to be treated as a client? We wanted to be a fiduciary investment advisor, and that's where the relationship between an investor and the wealth manager is the same in law as a trustor-trustee relationship.
Our firm is a registered investment advisory firm where we act as a fiduciary. To uphold the fiduciary standard, we fulfill the duty of loyalty, which is we place the client's interests ahead of ours, the duty of care, which is consideration of the client's goals, risk tolerance, and objectives, and the duty to follow client instructions, where we must follow reasonable and lawful client instructions.
The standard of care is to serve the client's best interest. These include the duties of loyalty, utmost good faith, honesty, transparency, objectivity, and at all costs, avoiding self-dealing. These are not duties that we run away from. These are duties that we embrace.
And to the best of our knowledge, we were at the forefront of becoming one of the first registered investment advisory firms in the entire state of Louisiana with the focus on the fiduciary standard.
You really started off from humble beginnings.
You could say that, very humble. Today we now have 3 offices with our headquarters right here in New Orleans.
And we also have an office in Baton Rouge and one in Boca Raton, Florida. We have clients across the United States. In fact, we have clients in 26 of the states across the country.
How are you able to do this?
Our growth is driven by the philosophy of what Rudy and I call the 3 C's. Creating, first of all, certainty out of confusion, clarity out of complexity, and confidence out of fear.
And we deliver this by focusing on a long-term win-win relationship. We're not only our client's financial quarterback, but their accountability partner as well. And that is, we have strategic partnerships that allow us to fulfill any and all of our clients' needs.
To Rudy and I, it's not just about numbers or assets or words on a piece of paper. What really motivates us, what really gets up in the morning every day, is not just the desire to grow and protect their portfolios, but also at the same time to grow their investment mindset. We collaborate with our clients, we educate our clients, and we work with them closely to exercise better modes of thinking. And what Rudy and I mean by that are modes of thinking that are conducive to both growing but also maintaining their wealth. And we want to do this no matter what happens in life, whether the market goes up or whether it goes down, whether someone gets married or divorced or someone lives or dies. And together we work with them to make better decisions in response to whatever happens.
Well, creating custom financial plans and investment portfolios also makes a huge difference in enhancing a client's outcome. Our focus is on quality, not quantity. And customization requires time spent with a client to make sure all the pieces fit. We're not an out-of-state call center or some software app that you can download.
Our clients are not pulled together by a large bank or brokerage firm or insurance company in a model with literally hundreds of thousands of investors and an untested algorithm or app. The Italians have a phrase, su mi sarà. It literally means made to measure, custom tailored. Think of a suit of the highest quality and workmanship. This is what our clients get, a bespoke plan crafted not only for them, and one that is built around them. This is not a poorly fitted suit, a poorly fitted plan that's made for the masses. And the difference is in the details. It's quite literally the passion that goes into crafting it, and we aim to deliver both.
Tell us a little bit about your team.
Not only do we work hard to save our clients time and money, they also sleep better at night. Every single one of our wealth managers has more than 20 years of experience. We have been through it all, you name it, the tech crash, the 2008 financial crisis, and of course the COVID-19 sell-off.
And everyone on our team has not only an undergraduate, but also a graduate degree. These include legal degrees, MBAs, along with designations such as Certified Financial Planner, Accredited Portfolio Manager Advisor, Certified Financial Education Instructor.
I'd like to also add that Rudy and I have been interviewed by national magazines like Money Magazine, Morningstar, and so on. And our clients want a steady, experienced hand on the tiller, and that's just what they get.
What challenges are investors facing today?
Well, today, investors are facing a much more hostile environment. There's more information on social media or the internet that is not in the best interest of investors. And as a result, investors become more confused, especially when they do not achieve any success in the market. Stocks are expensive, bond yields are low, inflation is a threat. As a result of all of this, a larger toolkit is required to find a solution.
And we know what needs to be done if suitable and they meet the net worth requirements. That means not just plain vanilla stocks and bonds, which do have an important role, but also world-class hedge funds, private equity, private credit, and private real estate.
What should investors do now?
Well, investors also need to proactively prepare against future market declines now, not later.
This is what is called tail risk management. And the goal is to attempt to protect against large losses that can destroy an investor's nest egg. Having downside protection set up in advance is crucial, and it's an area that we could really add significant value to a portfolio.
Now, there are different investments we can use to potentially hedge against different types of shocks in the market, and we can do this in advance, and it helps reduce the impact of big unforeseen sell-offs, otherwise known as exogenous shocks.
And of course, no strategy is perfect, but it's important to do this in advance, not after the horse is out of the proverbial barn door.
A lot of people are concerned about their tax bill going up.
Well, taxes are historically a big drag on returns. Tax-efficient strategies are critical, and it's something we specialize in.
And we do this by proactively managing an exposure to fund distributions, utilizing municipal bonds, tax-efficient mutual funds or ETFs, along with tax-smart withdrawal strategies.
And we can also help reduce or defer their gains with 1031 exchanges, opportunity zone funds, or even Roth conversions in lower tax years.
One little-known vehicle that high net worth investors should know about is what's called direct indexing. Direct indexing allows you to create your own custom-tailored index that you could control, built around your values and your tax situation, that can generate significantly superior tax outcomes. These strategies often target an increase in your post-tax index returns by 1 to 2% per year versus simply indexing it to an ETF or a mutual fund.
Why do your clients want to work with you?
Our clients come to us to do the heavy lifting for them. Frankly, many of them would rather be volunteering, traveling around the world, or just reading to their grandchildren.
You know, we have clients for decades, not just the first tier clients that came on board in the late 1990s, but also we get the daughter-in-law, the son-in-law, the cousins, the aunts, the extended family. Now, we respond to their needs in a very timely fashion. I think that's one thing that gives us an advantage, and it's something we're quite proud of. And of course, the proof is in the pudding. Our process simply works.
If one of our readers want to reach out to you for more information, what should they do?
To learn more about how we might be able to help you, or to at least point you in the right direction, we offer a free introductory 30-minute in-person Zoom or phone consultation. To schedule, call us at 504-831-4636 or email us at info@regattaresearch.com. You could also go to our website, regattaresearch.com, where you could also register for our free market updates. You could get our newsletter and register for our upcoming social events, market outlooks, as well as purely educational webinars.
And you can also follow us and learn more about investing on our Facebook, LinkedIn pages, and our Eric Greschner and Rudy Blanchard YouTube channels.
Thank you for joining me in New Orleans Magazine for our spotlight on New Orleans-based wealth managers.